What's up, folks? Alright, guys, we got a short week ahead of us. Market's going to be closed on Friday, unfortunately, for the holidays. So we got a short week, guys, but we still got 4 days to get better and improve our game a little bit. So that's what we're going to do. As far as what to expect this week, guys, obviously everything right now is kind of headline driven. All the headlines being regarding the coronavirus, right? Cases spiking worldwide, different phases of reopening plans getting shut down, reclosing, etc., etc. Kind of tune out this crap, guys, and let's focus on, the market itself. Let's focus on the charts itself. Now, personally, before we jump into the market, guys, my open trades at the moment, I got a couple of iron condors here on the SPX. So, iron condors, guys, up here at 3160, down there just above 2900. These all expire different days throughout the week. I'm not really banking, guys, on strength or weakness, just more so a continued shit show, excuse the language. So that's what I'm doing there with the iron condors. Those have been working really well over the last couple of weeks. If we open up, anywhere above that level, anywhere below that level tomorrow morning, given the fact that all those bad boys expire this week, should be looking to take those off, guys, for some nice profits, right? And then we can go enjoy the 4th of July weekend with a little bit of extra money in our pocket. A couple of put credit spreads, guys, here in TLT. So we took off 2 of those last week for some nice profits. Took those profits, jumped into another couple spreads here down at 161. The whole to do right now, big money is leaving equities, big money's going into treasuries. Not sure if that's the case or not, guys. However, some good volume coming in and making a nice move above the 21, collecting some nice premium there. So that's it for open positions, guys. Between those positions, the condors, the TLT, we got a good chunk of, max potential profits. Just shy of $2,500 open of max potential profit for the short week ahead of us. So I'm not really going to be in a rush to add too much more exposure unless anything starts screaming at me, guys. But, regardless of headlines here, a couple of important things to focus on this week, guys. So moving averages are not magic. They just personally, for me, give me kind of a reference, guys, and, give me a frame to work upon, if that makes sense. They provide a framework. So the observation I want to share with you guys right now is that the market closed Friday underneath the 21 EMA. All I'm going to show y'all here very briefly is a daily chart of the ES, of the SPY here, and then that 21 EMA, guys, right? All these different circled off times here, we're below the 21, is a general statement you should expect one of 2 things. Some choppiness and some ugliness, or some weakness, right? We can fall under the 21 and just kind of get these ugly, choppy, volatile shakeouts. We can get, some ugly sell-offs and then just some more choppiness, right? Ugly, 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 ugly. You guys get the point. When the market is drifting and fading underneath that 21 EMA, we just got to expect a little bit of potential weakness, choppiness, all the above. Just be prepared for that, guys. So heading into this week, given the fact that we are underneath the 21 EMA, that goes into my foundation of my prep, right? When the market is above the 21 EMA, I'm looking for certain things. And when the market is below that moving average, I'm looking for different things here, guys. So keep that in mind. The market is underneath the 21 EMA. And another interesting observation, let's just, assume here, right? For conversation's sake, guys, that the market does get weak, and we do go into a bit of a rollover here. One thing to keep in mind, right, is that trending stocks, regardless of how strong they are, even without the market rolling over, they tend to make that healthy pullback towards the 21 EMA, right? Like the Amazon here, guys, just super explosive move. It gets a bit extended, makes that reversion to the mean, right? Does it again here. Does it again a couple of weeks back. So, we think about supply and demand. We think about, just kind of psychology of the market. In the event that the big money, is heading for the exits here and they're looking to get the hell out of the equities, there's a couple of names, guys, that they've yet to really take profits in. We look at Amazon, still well above that 21 EMA. So, again, let's just imagine that the market does roll over. I'm not saying that's my bias, but for conversation's sake, let's say that the market does roll over. Bare minimum, right? Bare minimum, if some of these leading names just make the healthy pullback, that reversion to the mean down to the 21, they got a good ways to go. So we look at Amazon here, guys. still well above that 21. So if the market does get weak and Amazon just simply makes that healthy pullback, it's got a good ways to go here, right? Another name is something like the Big Apple over here, right? If the market rolls over and Apple just simply makes that healthy pullback to the 21, we got a good ways to go here, right, guys? Names like Shop, names like Zoom, etc., etc. For short opportunities, again, if the market does roll over, keep an eye on those names, guys. If big money is going to quickly start heading towards the exits, right, looking to get the hell out of stocks for whatever reason, these are the names that they haven't taken profits in, right? We can expect them to ring that register and book those gains in these leading names like Zoom, Shop, Amazon, Apple, if they're really looking to get the hell out of the market. We can see some of that selling already starting in something like a Facebook, something like a Google last week. Obviously, that was a bit news related, but nonetheless, guys, from a big picture perspective, these are things to focus on. And this is important for all of us, day traders, scalpers, swing traders. We want to, start our prep, guys, with that big picture perspective. For you day traders, y'all could kill a pullback in Apple, right? A big dump down to that 21 EMA if you're looking at the bigger picture, right, and working from, that foundation, right? Using that 21 EMA there as your reference point, right? That's the big reversion to the mean. If the market rolls over, we're very likely to fall to that level. Mark that level up on your chart, and then say, you day trade on the hourly, right? You can look for a gap fill down to the 21, things of that nature, guys. So these bigger picture charts and the kind of bigger picture review of the market here, it's something that everybody should be doing really regardless of trading style. One more thing to focus on here, guys, as headlines get uglier and uglier and uglier, is the volatility index. We've really yet to see, other than that big dump for the market a few weeks back when we pulled back to the 21, we really haven't seen a huge increase here in volatility, guys. So this is going to be key. As we head into the short week here, if you're looking for a bounce, you're going to want to see volatility quickly fading to the downside, along with our other favorite market internal here in the group, the ADD, the AD. If you're looking for more weakness, you probably want to see, guys, a big breakout here in volatility, breaking through this level of resistance, spiking up towards those recent highs, right? That would kind of spell out some trouble for the overall market. If volatility just kind of continues to bang here back and forth, we should probably expect a little bit more chop, which obviously would favor your boys' iron condors. But these are the things to focus on right now, guys, in a market that continues to be driven by ugly headlines. Literally a couple of mornings ago, we're doing our morning prep as we always do. The big picture, right, the main picture on CNBC was a couple of guys in hazmat suits lowering bodies into like a makeshift graveyard, right? Very ugly picture is being painted, guys. If you can tune that out and focus on what the market's trying to tell y'all, you can catch some killer opportunities, right? One of the biggest, days we've ever had as a group, which led to our first six-figure profit week as a group, was a couple of Fridays ago, or a couple of, weeks ago, guys, when the market completely made an epic bounce. And it all started with a huge fade here in volatility. So tune out the noise, focus on volatility, focus on the AD, right? Focus on where the market is in relation to these bigger picture moving averages, and you got a framework to work upon. I wish you guys the best of luck this week. As I mentioned, I'm going to be chilling, guys, with those iron condors and with those TLT put credit spreads, unless there needs to be action unless action needs to be taken, or unless anything kind of comes at me, But we did a few scans earlier for squeezes, and the well is pretty dry. Nothing attractive as far as squeezes go. So we got a pretty decent max potential profit, personally, guys, between those few different positions. If anything screams at me, I'll take action. If not, the number one goal this week is protecting those open positions and collecting some of that premium. So I appreciate you guys for subscribing. If you haven't already, please go ahead and do so. The swing trading course starts, guys, in just about a week, July 6th. So if you haven't checked that out already, there's still time to register. You can check out the link in the description of this video. I'm looking forward to the market opening up tomorrow, guys. So let's kick ass. We got 4 days to get better. Let's do just that. And I'll talk to y'all in the next video.